Welcome back to another week of Lunch Money brought to you by Sharesies. At Sharesies, our purpose is to create the most financially empowered generation.
For those of you who are new to Lunch Money, we do these every Thursday at lunchtime. This is a place where you as investors can hear from the people leading some of the companies available on the Sharesies platform and other investing experts.
So Lunch Money is also available as a podcast on Spotify, Apple Podcasts, Google Podcasts. So please, if you're listening, as a podcast, please take a moment to leave a rating and comment on Apple Podcasts. We'd really appreciate it. So my name is Alice. I'm a financial analyst here at Sharesies, and today I'm joined by Shak. If you'd like to introduce yourself.
I'm Shak. I'm a senior investments analyst here at Sharesies. And just a reminder, if you have any questions for us, you can submit them through the Ask a Question button down below. Don't leave questions in the discussion area as they are likely to get missed.
Cool. And then just a quick disclaimer that we have to do. So investing involves risk. You aren't guaranteed to make money and you might lose the money you started with. Any information we provide today is general only and current at the time. And if you're looking for help with your investment choices, we recommend talking to a licensed financial advice provider. Also, please be kind and respectful towards our speakers and your fellow viewers. Otherwise, we will have to take steps to remove you from the webinar, which none of us want to do.
Today, we're joined by Temuera Hall, co-founder and managing director of TAHITO, a world-first Indigenous ethical investment services company. TAHITO's managed fund is now available to invest in on Sharesies, and Tim's here to chat all about TAHITO and what makes it unique. Welcome, Tim.
Kia ora. Kia ora koutou. Kia ora kōrua.
Kia ora, Tim. Welcome, and thank you for joining us today. It's such a privilege and pleasure to have you on Lunch Money. So to kick things off, we thought it would be great if you're able to just introduce yourself and tell us a bit about your background and your career.
Okay, well, tēnā koutou tuataibi mihi ki a tātou e piri nei ki konei rungi i tēnei ipurangi. Me tīmata pēnei, mai te tārei o tihu o tamata kapua ki te urunga o te hoi o ngā toroirangi mai maketū ki Tongariro. Ko Tongariro te maunga, ko taupo nui a te moana, ko Ngāti Tūwhare tō te iwi. Ko Ngāti Rauhoto te hapu, ko Nukahau taku marae. So I'm from Ngāti Tūwhare tō and Te Aroa. And as I said, our canoe stretches from Maketū to Tongariro. And the marae I affiliate with the most is at Nukahau, a little place beside the mouth of the Waikato River at the northern end of Lake Taupo. And that's called, my hapu is Ngāti Rauhoto. So I was born in Rotorua, went to high school there for a couple of years. Then my parents moved us to the other end of the waka at the age of 15 and ended at Tauhara College. And then from there on to Waikato University, being the closest university to home in those days. And then I did what a lot of people can't do right now, and that was go overseas for 6 years, did the OE, got to visit a lot of countries, a lot of cultures. It had a fantastic time. Come home thinking New Zealand was going to be too small for me, and ended up working for Tūrangi, down in Tūrangi for the tribe. I got seconded in to work for the Lake Taupo Forest Trust. And our offices were at a Tūrangi. We have a large forest estate on the eastern shores of Lake Taupo. Not long after I started, the funds started flowing in from our forestry ventures, and I became the treasurer and then the investment manager for those funds, and managed to learn about this industry. So we're talking early 90s now. In 1996, we formed a funds management company that some may have heard of called Iwi Investor. So I set that up. We had some fantastic directors and advisors at that time. One of them is now the governor of the Reserve Bank. The other one is chairman of Infratil. So I had some fairly high-powered people that I got to learn from back in that time. And that's it. From there, I was continued in this industry of finance and investment, and now into funds management. We moved to Auckland 6 odd years ago. My wife got a job with New Zealand Trade and Enterprise. So married, 4 children, 3 boys and a girl, ranging from the ages of 12 through to 20. And when we moved to Auckland, I teamed up with the investment services group and set up TAHITO which was 3 years ago now. Yeah.
So that's great, Tim. So can you please tell us what TAHITO is and how it started up?
Well, it's sustainable and ethical investing. It's about rebuilding this connection between people and the environment. It's our sort of Indigenous contribution towards this global story of diversity, equity, and sustainability, but while still achieving a financial return. I mean, in short, it's about investing for a better future. It started just purely by a meeting of minds. I bumped into the principals here at the Investment Services Group, and they were keen to have some insights and access to, say, the Māori market, Māori economy. At that time, I said, well, I'm only interested if we can do something that has a Māori value base, and they were brave enough to take that on. So, we had a lot of confidence around our financial and investment capabilities, but we were definitely on a journey around an innovative approach to build a sustainable and ethical fund based off of Māori values. And the Investment Services Group at the time were on that sustainability journey. So it was just a good meeting of minds.
Awesome. And could you please explain the difference between investing in a managed fund like TAHITO and investing in some of the companies within TAHITO yourself, for example?
Well, by investing in a managed fund, you're sort of investing in the philosophy, the values, the purpose, and the experience of the fund and its managers. I mean, we come to work every day, so we're sort of full-time professionals. We get access to sophisticated data analysis, information tools. So, for example, we use the MSCI ESG system for our ESG integration. We use Bloomberg for financial analysis. We have teams of analysts, and we get access to numerous research reports and other analysis from brokers and other research houses. And then we apply portfolio construction, analytical techniques to measure the overall risk, tracking error, volatility, across a portfolio of companies. We have an experienced investment committee that oversees the performance and monitors the process. And then the investors receive comprehensive performance and accounting reports. But nowadays, the access to all this data is available to anyone through technology. To get the priority or the proprietary data, you've got to pay for licenses. In other words, if you want to use Bloomberg or MSCI, you just got to pay a license to get access to all that information. But I suppose the key difference is with a managed fund, you pay a fee for all that service. If you do it directly, all you pay for is the brokerage or the transaction cost. So you buy a service effectively. Yeah.
Great, thanks, Tim, for that explanation there. Now, TAHITO, you created a fund. It's called the TAHITO Te Tai o Rehua Fund. Can you explain a little, or tell us a bit about that fund, the types of things you're investing in, and how it's different to other managed funds out there?
Okay, so just quickly, the word tahito, if you were to look into the Māori dictionary, you'll find it means old. It's dialectal. You can have a W in there, or tawhito or tahito. But we use it in the sense of its time and history. We're talking about te ao tahito as opposed to te ao tipua and te ao hau or te ao marama. So it effectively refers to the period of time prior to our arrival to Aotearoa. And we've selected that name because we're trying to apply that knowledge set, which was the same knowledge set that was applied to astral navigation and, the navigation science and practices used by our ancestors to traverse the Pacific. So that's sort of what the name refers to. And Te Tai o Rehua, our first fund, is a Trans-Tasman fund. And Te Tai o Rehua is the traditional name, our original Māori name for the Trans-Tasman Sea. So that's how it's got its name. But
it's beautiful.
But essentially, it's a unique way of measuring companies using our ancestral knowledge with sophisticated ESG data, and of course, followed up by strong financial analysis. But our Māori ethics put people and the environment first, because they're both fundamental to living and thriving. So that thinking falls out of our Māori worldview, which centres on connection and the interdependence of all things. So it ultimately follows nature's model, our knowledge set. So it's ethics strives for balance and consensuality. Its behaviour is complementary and cooperational, and its target is reciprocity and harmony. So, in that sense, we're looking for companies that care for and acknowledge the environment and the people and communities that they impact upon. Yeah, so I can keep carrying on. In short, though, we look for companies that they display connectivity and they value relationships. They're serious about their ethics. They put people and the environment in high priority, care for and give back to the communities, and they have a long-term sustainable growth potential. And it's an ongoing process as globally we grapple with climate change, overexploitation, and pollution.
Awesome. Thanks, Tim. So can you please talk us through how you choose what companies to invest in?
We use a positive scoring process, which is most people just do negative exclusions, of which we do as well. We take out tobacco and alcohol and armaments and the likes, gambling. So that's a bit of the social consciousness there. If a company doesn't have a woman board member, they're automatically excluded. And then we do positive measures around how well they're doing with the environment, social and governance factors. But we've got over 50 quantitative and qualitative measures. With technology these days, our quantitative measures are ESG integrated, and good ESG systems have thousands of data points. But we select the data points that are best aligned to our values. So we run 3 positive screens. The first one looks at environment and controversies and climate change, the carbon, greenhouse gases, waste, water, efficiency, all those aspects. The second screen looks at the social cultural elements. We're looking at their values and their behaviours, the governance, performance. Then the third screen is our qualitative screen, which is a lot of effort, because that's when we dig deep into what they're doing for the communities. We're looking to verify that when they've set climate goals, or they set environmental goals or social goals, or even staff development and people development and health and safety goals, we're looking to see that they have the behaviours and the practices, the systems in place that are going to back that up, that can verify the goals that they set across the environmental, social and governance space. So, yeah.
That's awesome. Sounds like you're not short on data points to help apply your investment framework. So are all holdings listed investments?
Yes, yeah, we're just in the financial markets. As our first fund, we want to make sure it's good quality, that that doesn't look strange. And of course, you need to cover off your standard risks of volatility, capital protection, liquidity, so that people can move funds in and out easily. So we're listed currently. As it grows, you can take a longer time frame and maybe look at some direct investments, but that's not for a little while yet. That'll be could be a whole new fund.
Awesome. So what are some of the other investments that are outside your top 10 that are on the quarterly update?
We've got Heartland Bank. My Food Bag is another one. They're 2 New Zealand-based ones. They're Heartland Bank. They're doing some great stuff with their values and incorporating that Māori philosophy into how they run the bank and how they train their people. My Food Bag, of course, is it's more efficient in food management, and so lower waste. And they try hard to ensure they have sustainable products and a lot of environmental care. So they rate well. ones that sort of score the best, because we have what we call a T-score, or TAHITO score process before we do our financial analysis. And there's a company called Sims Metals out of Australia, which is a metal recycling company. So normally we wouldn't look at metals or mining because, they're ripping into the earth, ripping into Papatūānuku. So we tend to avoid a lot of those companies, or they don't score well, to be fair. But Sims Metals is one we stumbled across, which is actually a metal recycling company. It's a global company with good circular economy type principles. I don't know whether people are all familiar with circular economy. That's a reduce, reuse, recycle, and we add in regenerative behaviours. And then one other is Stocklands. It's a real estate company out of, again, big real estate company out of Australia. But what they do well, and they set the benchmark on measuring and monitoring their community giving, their community impact, all the engagement piece they have with their communities. And when they talk about the communities, they're genuine about the communities outside of their own buildings, because a lot of real estate companies, they use the word community quite freely. But when you look into it, they're only talking about the communities that exist within their buildings, not the surrounding communities. So those are some of the ones that score the best, I suppose, Sims and Stockland on our T-score process.
Awesome. And I think if I remember correctly, John McDonald, who's on the Sharesies board, is also on the My Food Bag board of directors as well. So great to have that alignment between
that's good.
Two of these businesses.
Thanks, Tim. And I've been really interested to hear about how you incorporate both those sort of that negative screening to start with, so excluding certain companies, but then the positive screening as well, where you're looking for the best, or those companies that are doing the best. And just for anyone who's listening who might not have heard the term ESG before, that stands for environmental, social, and governance investing. I was wondering, out of chatting about those different things that TAHITO is invested in, is there anything in particular, any investments that you're most proud of in terms of aligning with TAHITO's vision and purpose?
Well, with a positive scoring system, they all do in one way or another. Mm-hmm. But if I was to sort of single out one company, companies that are really embracing circular economy type principles, because they align closest to our Māori values, this balanced, reciprocal type approach. In other words, you're trying to work in harmony with your environment. You're not over-exploiting. Well, a company that's doing really well through our lens is a company called Brambles. I mean, you can find fault with any one of these companies if you wanted to, but we've got a number of measures to try and ensure that the good far outweighs the bad. But Brambles it's a big logistics company, global company out of Australia, but they own their own forests. They get all sorts of accolades for their environmental and circular economy principles, and then their community piece. So they're probably one of my favourites. And they score, the favourites are those who get the best scores, of course.
Yeah,
awesome.
Actually, I just have a quick question. Do you mind giving us a quick rundown or an explanation about that T-score that you talked about before, and how you sort of come up with that, what it means?
Yeah, well, as I said, there's 50 measures, and effectively you're just adding them all up, but we will weight the different measures according to the aspects that are more important to and aligned to our values. So we'll give more weight to the community piece, for example, over the governance piece, but they're equally important. And the score actually adds up to a total different number, but for the purpose of presentation and representation, I suppose, we just made it out of 10. So you just consolidate it out of 10 so that it looks comparable to ESG scores, because they've done out of 10 as well. So it's a combination set of those 50 measures, but we will weight the qualitative measures over the ESG scores, because that's the more important part of our research, is the stuff we do independent, as opposed to data that's been dragged down through a big corporate, even though MSCI is a pretty good organisation by our standards.
Tim, you released the fund update for the second quarter. Can you give us a brief overview of how the fund performed over the quarter and what you use as the benchmark for the performance?
Well, it's a trans-Tasman fund, so we use, there isn't any real specific benchmark for a sustainable, responsible investment fund at the moment, because there's certain sectors we don't touch or, are going to be light on. As I said, things that rip into Papatūānuku, well, we're going to struggle to invest in those big polluters, big emitters. So that's all your airlines, your mining companies, which are a big part of the index, like A2 Milk, for example. And I don't like to sort of name and shame, but that sector, a lot of the food sector, there's so much waste. They just fall outside our lens, I suppose. But so we just use a standard benchmark. It's the 50% NZX 50 portfolio index, and for the technical people, that includes imputation credits. And then it's 50% ASX accumulation 200 index. So it's, in short, it's the NZX 50 and the ASX 200 as the benchmark. So we're comparing ourselves against the market generally. But the fund for the 3 months to end of June did really well. We did 3.8% against the benchmark of 2.8. So, to do a 1% outperformance over 3 months is pretty good. Year to date, we're 8.6%. I mean, again, you see the disclaimer at the start, eh? Historical returns don't guarantee future performance. We've got to make sure we cover that off. But for the year to date, we did a healthy 31.7%, but the index is at 26.3%. So the markets have been doing well over the last 12 months. But to be 5.4% over the index with a high ethical and sustainable bar, that's sort of, we're starting to prove that you can invest for good and put your money doing good and still get a competitive return.
Yeah, that's absolutely awesome to hear. So do you have plans to start investing in other markets apart from New Zealand and Australia?
Yeah, well, in this industry, we're coming up to 2 years history. You sort of need 3 years of performance history, and then the big investors will start to take a bit more notice, but we're certainly getting a lot of inquiries. So once we feel as though this fund has reached a healthy size, we will then start to look at other funds. We're sort of targeting, we want it to be open to all investors. It's sort of in keeping again with equity and diversity principles that we hold strongly to. But I'm looking forward to, and it could be as early as next year, we start developing new funds. In the current environment, an income-focused fund, again, using the same basis, and then international equities. We need to partner with someone else, because an international firm, because to do the research across all markets across the whole globe is a huge ask, even with all the technology. But that's what we sort of have in the pipe. And then, but we want to be open and innovative too. That we could find other types of funds that better represent what we're trying to achieve, which haven't quite been thought of yet, because the industry sort of boxed into fixed interest, local equities, global equities, and then you get property, and then if you get fancy, you get into hedge funds and derivatives and all that sort of space. We try and stay pretty clean. But so that's, I suppose, a long answer to a short question. Sorry.
That's been really interesting. Something I was curious to hear from you is if you had any plans for to create more managed funds. So you've answered that one. But something else I'm interested in hearing your thoughts on is, what do you see as the biggest challenges and equally the biggest opportunities for TAHITO?
Firstly, as a new fund, even though we're part of a good sizable investment services firm, ISG looks after 5.5 billion or over 5.5 billion of clients' funds. you still got to establish your own credibility in a new space. I mean, but the interest now in sustainable, ethical investing is high, and that funds are flowing into this space at quite a rapid pace. So it's about the first challenge is maintaining consistency in what we do and the credibility around how we measure the companies. So that's our sort of internal challenge, and as you grow, you've got to bring people on board that not only understand the finance and investment world, but they also understand the Māori worldview or Indigenous way of thinking, so that when they look through the lens, they've got that right frame and right understanding of what we're try to measure and how we measure them. The biggest thing is that the companies are still, while there's quite a good shift in the corporate sector towards sustainability and climate change initiatives, carbon zero and the likes, it's they still have to do quite a bit of work, and it's a fast-moving space and a lot of pressure to be able to maintain the data and quality of data so that we can measure them. Because if they don't have their climate change data, then it's a struggle for us to look at them. And yet there's some good companies, particularly New Zealand companies, that are probably not quite up to play yet with how they're measuring all the environmental and social impacts.
Awesome, thank you. Something I also quite like to know about is, are you seeing impact, or what impact can you see of TAHITO on having on the investors or companies that you're invested in? Have you seen any impacts?
Oh, because we're pretty small, we're probably just seen as a cute little investor. But I mean, we write to all the companies and say, look, we think you're doing good. And here's the reason why. The impact we'd like to have, and no doubt, hopefully it'll grow over time, is that companies start to acknowledge and measure their externalities. They start to care a lot more about the environment, and they embed that in their thinking and their behaviours through their leadership and right through the organisation. So, the accountants call it the externalities. That word we don't have that word in Māori. You're connected to the environment, to the trees, the ocean, the birds, the insects, the emotions. And so it's that holistic, interrelated, everything is interrelated, nothing exists by itself, thinking and philosophy that we'd like to see corporates and companies adopt. And the starting point is measure your externalities, understand the impact you have on the environment and on the communities, and address them, mitigate them, or improve them ultimately. Because if we don't do this, we're setting up our children and grandchildren for a different way of living. They won't have the freedoms that we have at the moment, COVID aside, of course.
Awesome. Thanks, Tim. Now, we're seeing an increasing trend of funds taking a position with regards to voting on resolutions. Can you explain how TAHITO decides to take a stance in regard to voting?
Yes, so I mean, that's if you're a signatory to the Principles of Responsible Investing. Our other sister company is, we haven't signed up as yet, but we follow those same principles. So we make sure that we vote our shares when the company voting comes up. What we look for, because typically you're voting on the directors. I mean, if they don't have equity or diversity across the board, then we'll vote against the males if we think they should have more females. So we sort of voice ourselves that way. And then the other tougher decision is the equity philosophy and values, because our cultural view is that the inequity is probably the biggest challenge we have. And if we want to deal with climate change and all our other challenges, you actually got to deal with the equity issue, wealth being concentrated in a few people. And so when it comes to the remuneration reports, we struggle to vote for those because they're generally about giving more money to a few as opposed to sharing that wealth across all the organisation. I mean, it's a tough one. it's a stance we've taken because we think it's a necessary stance to sort of improve ourselves globally as humans. So we've got a tiny little voice there, and we struggle to accept the remuneration reports, which is normally the only other thing you get to vote on. And then further to that, we will engage wherever we can. They have investor forums every now and again. I mean, they're sort of mostly online now with the COVID impact. Sometimes we sit in the room with the CEO and the CFO of these companies, and we'd be the only ones sitting there asking non-financial questions, asking about their climate change and their environmental policies. And so the more engagement we can do, the more we get the sort of message across.
Oh, great. So a question from me is, where do you see TAHITO in 5 years' time? If you were to say.
I would love it to be a household name, that people think if they want to invest their funds with good purpose, quality investments, making a difference, doing good, well, then they look to us first. I mean, we think by bringing a Māori type fund, it's a Kiwi fund. This is New Zealand. It's unique for us, and it's a unique way of looking at companies irrespective of where they are in the globe. But we can make it a New Zealand story, as we are doing with the, like Matariki celebrations now, and a number of other things in Māori Language Week, and embracing our cultures and becoming an example, I suppose, on a well-diverse, culturally rich country. So we want to be part of that story and be seen as a positive New Zealand Inc. type finance and investment services company.
Awesome. Now, Tim, we hear Xero, or we understand Xero is one of the companies that the fund has invested in. I'm interested to know how the screening process worked for a company like Xero, and how you went about deciding whether it was fit to add it into the portfolio.
Yeah, actually, Xero is a good little example. When we first look at Xero, they didn't even get past the first stage of our screening, a couple of years ago. And the reason for that is we couldn't find anything around what they were doing for the environment or what they were doing for communities. But in a very short period of time, they obviously picked up on this, and then they become very good at doing that. And actually, they're now leaders, because tech companies, like them, by default, they have a low impact. They have a low footprint, environmental footprint, because of the nature of the businesses and the services that they provide. So once they did start to grasp hold of ESG and then all the non-financial reporting standards that goes with that, they very quickly displayed a very strong commitment to environment, targeting carbon zero, carbon neutral, carbon zero, and to what they were doing in the community. So it was a surprise, actually. They're one of the fastest movers that we've seen of companies now, just really showing, as we said, meeting our measures on the diversity and the equity piece that we're looking for, and sustainability.
That's great to hear. And is that a trend that you see happening more and more often across New Zealand, but also Australia?
Yeah, Australia is probably better than New Zealand, to be fair, maybe because they're bigger companies and can put more resources into it. But yeah, we are getting better at this space, but it's a matter of having to. What you'll find is where there's legislation on things like health and safety and modern slavery, those sorts of areas, well, everyone's, of course, are going to play ball because you have to. But we're looking for companies that are showing leadership in this space, that are actually doing more and taking on that stakeholder primacy, not just shareholder benefit, that they're looking to be better people, better citizens, and actually address some of the issues, that we face, that they face directly in their specific industries. We want them to be sharing, partnering, both with communities, with other businesses in the industry, not just 100% competitive trying to drive for bottom line. We want that reciprocal relational behaviour in companies.
Awesome. Thanks, Tim. Now, I'm just aware of the time, and we do have a handful of questions that have been submitted from people listening in, so we might move on to them now. We might do these quick fire as well, so sort of 30-second answers, because there are a handful. So the first one is, does TAHITO invest in any Māori-led businesses?
Because we're sort of limited to listed companies at the moment, and most Māori businesses are privately held, we don't have any yet. But I mean, we certainly measure the amount of diversity in their leadership team. So, we're looking for Māori and other ethnicities in their leadership team and on their board.
Great. And now this question is from Mark. Does TAHITO offer a dividend? If so, what percent, and is it above market rates?
So currently, we don't have a dividend or an income component to it. It's just it's all reinvested. But I mean, that could be something we work on next, as I said, an income-based fund, because I know that's important to a lot of people, is having that cash flow from their investments as well. So not at this stage, but that's coming.
Cool, thank you. Now this question is, what's the future of investing in Te Ao Māori?
Well, I mean, I think it's the Māori economy is a growing part of New Zealand's economy, and it will continue to grow. I mean, the fundamental difference is most of our large Māori economic authorities, they're owned by iwi or hapu. They're owned by caste of thousands. It's not a shareholding type basis, even though some of our trusts do. So as we get better, and I sit on some of our farm trusts and forestry trusts back home and in the central North Island, and we're starting to collaborate more. We're building up bigger investment pools and making more investments, and we have the underlying cultural and social imperatives of caring for the environment, creating jobs, improving the well-being of all our beneficiaries. So, that's a sort of positive framework in which we invest. It's not just about making a bottom line profit. And if you can effectively trade off the dollar return for your environmental and social returns. And so that's getting into when you do economics, you're looking at it quite a bit differently, because you get just as much benefit from improving education, improving health, and creating employment and having those funds go back into your communities than you do out of just making a profit at the bottom line. Of course, you can take those profits and invest in those things as well, and it's a bit of both. So I see a lot of growth for this country as we partner and invest, both amongst with other Māori organisations and with mainstream. And again, that's what we sort of look for in TAHITO New Zealand companies and Aussie companies, that they are taking a positive approach towards working with their Indigenous communities.
Great. And now this question is about the fund. How often does the fund get rebalanced? Do companies ever get removed from the fund? That's a good question.
Yeah, I mean, it's a long-term focus. We are monitoring the companies all the time. Of course, if they play up, they do, they have a controversy of some sort, we will remove them. If they break, if we feel it's bad enough that it undermines the values upon which they've been selected. What we do every year is a comprehensive review of the whole portfolio, and that's to make sure whether these new companies that might have come onto the scene that deserve a space. We have about, our mandate is 20 to 30 companies, because that's a lot of research to do over that many companies. But yes, companies can drop out and we can add them in. And that's happening every year we do a comprehensive review, which is a lot of work. And at that time, the bottom scoring companies might drop off and higher scoring ones may come in. But we try not to churn the portfolio, which is, because that's just costing the investors money every time we do that. We're looking for that long-term sustainability. Generally, the top companies will continually perform well, but occasionally they might have an environmental disaster, or a board member or the CEO does something unethical to the point where we say we can't hold you because of bad behaviour.
Great, thank you. Now this question is from Jeff. He says, could you talk to the KiwiSaver option?
Well, across our shop, we have another sister company called Select Wealth. They have a KiwiSaver scheme, and so Tahito's included in that, and that's so that's one access to KiwiSaver. And of course, you just go online and click the button. Those of you that have in KiwiSaver and know how easy it is to move from one scheme to another. So that's where we can be found. And we're sort of working with others to potentially be involved in their KiwiSaver schemes. So it's sort of a long process as they do all their due diligence on us. But yes, Select KiwiSaver is the easiest option right now.
I didn't know that it was available through KiwiSaver. Now, this is the last question. It's from Justin. He says, Kia ora, Tim, ko taka tapuia ho. Does this feature your ethical T-scores at all?
Yes, that diversity and inclusion, we look into those policies specifically. And the Code of Conduct, Diversity and Inclusion policies are two policies that we look into to see that companies are doing that well. And of course, the companies that do have that diversity and inclusion, there's award systems, probably more so in Aussie than New Zealand, but we do have them where companies get recognised for their diversity and employment policies. So that forms part of our measures.
Awesome.
Great.
Thanks, Tim. I think one last question before we wrap up, and I'm keen to hear what the most surprising thing about starting a fund that's geared towards ethical values that you didn't anticipate.
I didn't anticipate the amount of work. When we had to prove that this was going to work. It was a 2-year research and development phase, and then back testing to see that what we're trying to do was actually going to be, was going to work, and we're going to get good results. Taking a cultural value like we had, and preserving its integrity, and then turning that into a measure was probably our biggest challenge, and that we did it in 3 steps. I mean, I work with colleagues and friends of mine who are steeped in this place. We spent years in wānanga within our tribe, learning about our cultural values, history, whakapapa, creation narrative. I mean, I can go all day on that stuff, and that's my passion. But to get it from a value like whanaungatanga te wao, make your world relational, we had to first create a sort of we had to write it in English in a form that was abstract, that best reflected that value. We had to go from a Māori word, understand it in Māori, turn it into English that best captured what it was about, and then write another meaning for it in an applied sense, so that we can then find a measure that best aligned to that value. So those were the steps that we went through, which was the challenge. And it's an ongoing challenge. I suppose the big challenge is to keep the integrity and authentication and represent our values to best we can. There isn't sort of an audit process out there yet. So that's our challenge, is that we're not seen to belittle or lower our ancestral knowledge, and that we maintain it to a high quality.
Awesome. Sounds like you've put like a lot of thought and care into how you've come up with and translated those into values, and translated those values into like a practical investment framework. So congratulations on that, Tim.
Yeah. And there's summaries of all this on our website. We've broken it all down. to explain the Māori worldview, how we apply it, how we look at things. So it's all available there.
Awesome. All right. Well, thanks for tuning in, everyone, and a very special thanks to Tim for his time. Just a reminder, Tahito's managed fund is now available to invest in on Sharesies. And next week, we have Sorted's Money Week, an annual campaign aimed at raising New Zealanders' financial capability.
So next Thursday on Lunch Money, we will be doing a special Money Week episode. We'll be joined by Tom Hartman from Sorted, Sam Stubbs from Simplicity, and our very own co-founder and co-CEO Sonia Williams. We'll be chatting about financial well-being and demystifying key money topics. So Tim, I just wanted to thank you again for your time on Lunch Money today. That's been really interesting and insightful, just hearing firsthand from you about Tahito.
O he mihi kia korua kia koutou katoa Sharesies mō tō manaaki kia hau kia Tahito. Nā rea tēnā koutou.
Also, you can check out our daily financial news podcast recap. It's around 10 minutes long and published at 5 p.m. Monday to Friday on Spotify, Apple Podcasts, and Google Podcasts.
Great. And to everyone, enjoy the rest of your week, and we'll see you next Thursday.